Thanks for tuning into the All Funds Network. Today we're here with Alex Ryvkin, founder of Rho Protocol, the first institutional grade market for crypto interest rates in 2022. It was founded. Before Rho, Alex was the crypto custodian Copper's chief product officer and spent about a decade prior to that in capital markets and FinTech as a sales trader, derivative structure, and a startup CEO. Alex, thanks for joining us today, man.
Yeah.
Thanks for having me. Really nice being here.
Yeah, very exciting.
Long overdue conversation, so we're excited to have you. Let's kick it off by just telling us what are you guys working on at Rho?
Sure thing. So the company name is Rho Labs, and we are, as you rightfully mentioned, the builder behind Rho Protocol. And the easiest way to describe us is an interest rates DEX. And we kind of needs to be unpacked, but that's the shortest way to put it. We're an interest rates decentralized exchange. So interest rates in TradFi, I'm sure a lot of your listeners are very familiar with it, but even in capital markets, not everybody is. It happens to be, if you look at open interest and some of the other metrics, the largest asset class in capital markets, but kind of the best kept secret. We're talking funny numbers for open interest, hundreds of trillions of dollars, like several times the capitalization of the global bond market, for example, public credit. So reasons for that: rates are everything. The fluctuations of the rates affects the price and value of each asset class, whatever you're holding in your portfolio. Everything, rates always matter. So these instruments happen to be the easiest, the cheapest, and the most efficient way to manage that risk, or for a lot of hedge funds to exploit some of the efficiencies and mispricing that they find in rate curves and things like that. So we're building that. We're bringing that asset class into crypto. In TradFi, it's predominantly because TradFi is obviously a super efficient market and the asset class has been around for decades. It mainly has to do with treasury rates. In crypto, we got a lot of different types of rates. Some of them are very similar to traditional interest rates, like lending rates on decentralized lending venues, right? It's just an interest rate, nothing different from fiat credit. But there are also things which are very specific to crypto, like staking, like perp funding, like some of the other things around there, different families of rates that became very prominent. And still it's very it's not easy to manage that risk. And people start realizing more and more as the returns contract. People start realizing more and more that these things actually matter quite substantially. And as a influence on return of your overall portfolio, it matters a lot. So they kind of wake up to the fact that you need to manage that risk as well. And it's also a very inefficient market because we are effectively, to the best of our knowledge, the first venue that offers liquid, kind of full-on market-driven pricing of this asset class. So there is a lot to be exploited on the speculative front as well. So we're building a venue for that, both for hedgers and speculators in crypto native interest rates.
Got it. Okay, so let's take a step back and let's hear your backstory. So what got you interested in this area?
I'm a kind of recovering TradFi dark side individual, like many of us here in the space and institutional side of the DeFi space. So I started, as I mentioned, in sales trading, did a bunch of things with derivatives and then ran a couple of startups. The last thing I did before starting Rho was running product and technology for Copper, institutional crypto custodian. So once I was at the end of sort of middle to the end of 22, I was contemplating what to do next. And the thesis was basically that between us at Copper as a custodian and a prime broker and some other players in the space, what we were doing, we were building institutional rails to allow large institutional investors to basically be the part of the space to properly lean in, not with this like little, test $100 million like they used to before, but properly. And when I was thinking about it in 22, I was kind of considering that is already done. So we've built those rails. Of course, we're going to continue building on them. But if you're an institutional investor who wants to commit, you'll now have all the bells and whistles that you need to commit. And then the next question was basically, once these guys are in, what will they need? What will they require from the market? And I looked at the lineup of assets and based on the knowledge I got from capital markets, we had spot, we had futures, we had options, and the one thing that was missing was swaps or rates as an asset class. And as I'm sure you guys know, a lot of your listeners would know, a lot of things are just not possible without the liquid rates market. And that was a kind of an obvious thing. I looked at different ideas, and Rho was born as the kind of thinking behind was look at what Deribit was doing in 2016 with the first Bitcoin option. Look at what BitMEX was doing in 2015 with a perp, right? Back in the day, you have to be a little bit ahead of the curve. In 2016, a few people probably thought Bitcoin option is going to be as big as it is today. That allows Deribit up until today. We know recently they got acquired, but they still hold like a quasi-monopolistic position in options trading. Slightly different market structure wise with perps, but perps as an asset class basically took over derivatives trading in crypto and blew up. And again, when people started in 2015, it was probably a little bit too early. It felt like, well, it might not work out. But once you solidify your position as a market lead in crypto, it's really hard to kind of knock you off and off that pedestal. And that was basically the idea. So we started Raw thinking we might be a little bit ahead of the curve. And as it turned out, we were actually very little, maybe like 12 months ahead of the curve. That allowed us to be the first tenure to present it to the space. And now I'm sure there are going to be a lot of followers given what we managed to achieve and the development on the market.
Yeah, that's exciting. Yeah, congrats on obviously kind of going through that. It's always going to be, the ups and downs in crypto. It can be a little crazy at times, but I'm curious, obviously the crypto interest rate market being new in the space, do you kind of see this as becoming like a benchmark akin to like a LIBOR or a SOFR for crypto? I mean, what are your thoughts there as we kind of move into this space?
I think it's inevitable. I'm not sure if it's going to happen tomorrow. It will take a little bit of time, but it just makes a lot of things so much easier. So it's in all of our joint interests, including us and possibly some of the competitors that might be coming to the market following us. It just makes sense for all of us to develop some kind of a benchmark rate, because that basically unlocks a lot of liquidity, unlocks a lot of get rid of a lot of risk in the system, gets rid of a lot of risk in the system. And eventually, I'm sure we will converge to some kind of a benchmark rate. We hope to be either that rate or the component of that rate. For the time being, though, I think it will take a little bit of time, because a lot of people try to construct their reference rate in the kind of some theoretical, mathematical way. But realistically, the only way to do it is to do it through just liquidity, right? So once you get the liquid market, the rate at which people are happy to trade, the market determines the benchmark, and then the benchmark helps the market. So that will help. That will take a little bit of time, but yeah, I do think we will end up there eventually. There's no doubt about it.
Yeah, and you said something earlier. Obviously, you're focused on the more of a DEX framework. Do you see Rho kind of reshaping the role of centralized yield platforms going forward, given kind of where you're at today?
I think when we started as a DEX, we're not kind of, and we're still not religiously pro decentralization or anything like that. We think there are some awesome advantages to decentralized trading and settlement or partially governance, but eventually, I think the traders care about the quality of your product, right? So it's not about, nobody's going to tell you I'm not going to trade because you're not on chain, right? The opposite actually sometimes happens, but very few people say you're not on chain, so I'm not in. We think that when we started that in 2022, I think we were quite sober about the fact that if we want to launch a proper centralized new venue with a new asset class in the middle of the bear market, we started the company basically 1 week before FTX, right? So by the time we were raising money, we knew we're not going to raise $20 million like at the end of 2021 with a couple of pages of the light paper. So we were quite sober about it, and we were like, what's the way to build early liquidity in this market and position us best for the fast adoption? So of course, when we're looking at on-chain yields and when we're looking at the ease of attracting liquidity, that we recently demonstrated with our liquidity vault launch, for on-chain primitives, it is much easier. But I think as the asset class develops and evolves, there's got to be more people coming in. Some of our investors, we got awesome trading firms on our cap table who are very keen to help us build liquidity in this market further. They also feel that that's a kind of a potentially next big thing. And now we're in a very different position. So we spoke about it before. We're working on the central limit order book as well, and there's going to be a new version of the market that we will present reasonably soon. And we think that unlocks a lot of institutional liquidity and some of the other things around it that will help us to reach the broader audience. But of course, on-chain yield is one of the target markets, and communities around some of the biggest on-chain yield protocols should be looking into us or similar primitives to manage their risks and kind of optimize their portfolio returns.
Yeah. So like you mentioned here, like liquidity is obviously probably the biggest key factor. Take us through the roadmap of kind of like where you guys started and kind of, I understand you guys just went live with the post beta mode, I should say. So talk to us about kind of what you started with and kind of how you see the market evolving in your end.
So we launched our closed beta in June 2024, almost about a year ago, and we lifted the whitelist, so we're fully public as of April. I think we've been steadily growing, steadily building liquidity, volume and open interest. Right now, we're trading around about $2 billion per month in notional volume, and the open interest is sitting around about 30 million on average throughout the month. And realistically, I think that once people realize the advantages of the asset class and just the nature of the asset class as such, it's not because we are so amazing, that in terms of the volume traded, it should actually outperform all of the other asset classes like it did in TradFi. We should be talking about potentially higher volume trading on rate products than on perps, for example. Obviously, it's going to take time, but I would give it a couple of years after it sparks, a couple of years on the rate should overtake in terms of the volume or overtake all the other derivatives. Then for us, it's a very capital efficient product. So the liquidity requirements to support that trading volume are more modest than it would be on something like spot trading, for example, obviously. And it's a very capital efficient product even in TradFi. It's just the structure of it is such, which makes it also quite attractive. But we think that from our current position, we should be looking at least to 5 exit or 10 exit by the end of the year, and we think it's quite achievable with the number of conversations we have ongoing.
Yeah, and the first product you guys started with is interest rate swaps.
It's interest rate swaps, yeah, exactly. And the majority of the volume is coming from perp funding rates. There are also some staking products out there, but perp funding has been the kind of the mainstay of the volume and the interest we're generating.
In terms of the interest rates you guys are using, are you guys using like the 10-year rate, the 30-year rate, or you guys just kind of let the market determine what the rates are?
So for the time being, when we're looking at something like perp funding rates, again, one of the cool things about our product, right? As we discussed before, when you're looking at TradFi rates, it's mainly treasury rates. So for treasury rates, there is a bit of volatility around about every 10 years. And the rest of it kind of tends to lie flat. That has been the pattern for the past 20, 30 years, right? So in order for people, the question I get most common when I say rates in crypto, they go like, okay, where is that corporate with 30-year horizon who is keen on managing that interest rate risk that you're selling to? The thing is, it's not the function of the fact that rate products can only cater to that type of audience, right? But it's the function of the underlying, the treasury rate, and its particular volatility profile. So if you look at the rates that you trade on Rho, perp funding goes from normally perp funding on Binance sits at about 10.95% annualized, right? That's one bip per 8 hours. Quite easily in, not even in the peak markets, but quite casually lately, it goes from minus 25 to plus 60 over the course of 72 hours, literally, and then back again. It's kind of mean reverting. It's weird. It's a fun thing to trade. It can evaporate your returns. Like if you're a basis trader, right? If you're trading on leverage, for example, and it's a relatively short-term trade, so your profit is in basis points, and that thing just basically puts your hurdle rate at 70%. Or if you're short on a basis trade, then like suddenly you might be actually paying rather than receiving funding. So it's a very different type of product. And the most popular product, the most popular term on our market is actually the front month, sort of similar to the CME. So we're currently doing monthlies. So right now, for example, we're recording that on the 20th of May. And now we have the May products, June, July, and on some markets we also have like 6-month products. So we're looking into the autumn months. I think the one that expires. There's one now that expires in September. And the most popular one is the front month, closely followed by the second month, and then like it starts dropping off. So the nature of the interest in this in these products in crypto is very different because of the different structure of the underlying rather than just the product itself.
Yeah, that's interesting. So I guess, do you see a path where Rho evolves into kind of a DeFi CME for crypto rates where, there is model closer to OTC swap or execution facility? What are your thoughts on that?
Music to my ears. I'm happy to call us a DeFi CME any day. Listen, I hope it's going to be something like that, right? And it's really hard to predict how the asset class will develop. I would love to be, obviously the goal for us is to be, you can call it CME. We sometimes say Deribit for rates. We want the same kind of share of volumes in rate products as Deribit has in options. It could be CME. I don't mind. Let's take CME.
Sure. That's great. I guess going back to one question I had, Alex, was, how do stable coins play into the structure of crypto rates, interest rates here of what you're building? Is it just a settlement layer, or are they core strategies that people can use on Rho?
It's a bit of both. So right now, for funding rate products, like a step back, we're basically taking as a collateral by default for any market, we're using the same asset that the underlying is settled in. So if you're looking at funding on centralized exchanges, the default asset would be USDT because that's what you're trading in. If you look at funding on DEXs, it's going to be USDC because that's what majority of them are trading on. And it could be both. So we're very interested in accepting interest-bearing stable coins as collateral. That comes with certain limitations. Some of them are treated as securities, which obviously we cannot touch, not being regulated for any operations with securities, really. Some of them are not, and that also comes with, for example, that's not only relevant for stable coins. Also, if you're looking at the staking market, for example, again, the default asset would be ETH. But the first thing you end up thinking about is like, for example, what about staked ETH, right? Steve from Lido. That's another thing we're interested in. So that could be the settlement layer. And also, there is an argument that depending on the stable coin, we can see some potential in building essentially rate curves for those stable coins. And for some of them, it would be just because of the way they structure their asset base that backs the stable coin. It will closely resemble the treasury curve, which may or may not be useful to some of the crypto traders. And for some of them, it wouldn't, right? Because there are stable coins which are backed by pure, for example, treasuries or money markets. And there are stable coins which are backed by basis trades or similar things, right? So depending on that, I think we are obviously in touch with all of them. We speak about doing different things with some of the largest protocols out there. But for us, the interest is kind of binary. We would like to accept that asset as a collateral and settlement currency, and we would love to work together to build the curve for that, because eventually at scale there is no way around it. Again, there's going to be a curve, right? We all know that.
Yeah. On that note, do you think crypto native assets like ETH and even like Bitcoin, like funding rates, do you guys see, Bitcoin funding rates in the near future?
It was a kind of a semi-philosophical question for us, right? So if you ask, like, we all know what is the US dollar rate. If you ask someone what is a Bitcoin's rate, I actually think the closest proxy for that, and some people try doing like, what is Ethereum's rate? Oh, it's like a lending rate on Aave. It probably isn't, right? Because there's not a very significant percentage of that asset is sitting on Aave. So if you ask, what is the Bitcoin's rate? It's probably its funding rate to some of the centralized exchanges. So something like funding rate on the Purple Binance is probably much closer to that than something like a lending rate on some of the decentralized protocols. So we already do funding rates from centralized exchanges for Bitcoin and ETH. We're looking at expanding the asset universe as well. So today you can come in and, for example, lock in your rate or like actively trade or arbitrage something like June rates on Binance and OKX on Bitcoin, right? Or you could potentially do a trade looking at if you spot some discrepancy between the funding rates for Bitcoin and ETH on the same exchange, you can do that type of cross-currency arbitrage. You can do some curve trades, steepeners, flatteners, a bunch of things that we already permit. And we want to expand the universe of those assets, but we don't want to go too deep into long tail assets, because it's super easy to create custom things, but it's really hard to make them liquid. So if we're looking to be an exchange, and for an exchange traded products, we feel that the top pairs and the top names that people are following are probably more significant potential in terms of trading volumes, if not for other things.
Yeah, it's interesting. It's almost like the market will kind of find the rate for Bitcoin. It'll arbitrage between exchanges, and then eventually, hopefully a platform like Rho will have that kind of like real rate. Interesting to think
Pretty
about.
much, and suddenly we are a CME for DeFi rates, as Skyler has just.
There we go. You heard it here first.
Love it.
That's great. I guess the question, given this, this new kind of interest rate category, market category, if you will, you guys are building into, how do you bootstrap liquidity, from something that doesn't exist yet going into this? Because obviously can be a tough road, but do you lean on the OTC desks, market makers, or do you build in your own internal liquidity provision, or all the above? What does that look like for you guys?
So it was an interesting learning curve for us as well. We took the right call by doing that initially on chain. Otherwise, we would probably still be running around the biggest market makers with enough sophistication to do something like this and trying to negotiate a very significant discount from their normal rate. So I think the biggest learning for us was actually the degree to which, if not in terms of actual providing liquidity, if not in terms of capital, then in terms of work that needs to be done for that integration, the market would rely on us, on the venue. We do our best to, we were very lucky actually with some early partners, like I can name Hero, for example, is one of our early investors who have participating very early as a liquidity provider on the market, and we were very lucky to have their support, and we were grateful. There are some others, but I think that the biggest learning for us was actually that we had to build a lot of things that we didn't expect to require to build in order for people to be able to step in. And again, thankfully, we started as an on-chain venue, so it was actually a more realistic lift. And in addition to that, right now, if we're looking at our current liquidity profile, so we just opened a little bit, a small sleeve of that liquidity to the public. We launched a liquidity vault, which is basically using the same strategy that has been providing liquidity to the market for a very long time by some of the people I mentioned and some others. And we capped it at $500,000 USDT in TVL, and it got taken up in about, I think we reached the cap in about 72 hours after the launch, or something like that. So it still produces very, very healthy returns, and we expect it to still be the case because, as always, it pays to be early in crypto, right? So you're now providing liquidity to the market where there's not a lot of competition, relatively for liquidity provision compared to like yet another perp dex, which everybody knows how to handle. And that creates some alpha opportunities. We don't know how long it's going to last, but for the time being, we have a lot of interest from some of the people we've been talking to for a couple of years. Now the return on that strategy is very visible. But unfortunately, the cap is reached. We want to optimize the return to the LPs as well. We will lift it at some point a little bit higher, but it will take some time.
Can you walk us through, kind of a hypothetical trade that somebody will use Rho for, in terms of hedging, funding rates, volatility, and how do they do that, prior to Rho?
So prior to Rho, the short answer is they didn't. For majority of them, and that's fun as long as you're printing stable sort of 20+% annualized returns on simple basis trade with very limited involvement. Now we're in a slightly different universe. I think right now I checked before the call, and for example, funding rate on Binance Bitcoin was at about 2%, and it probably dipped negative very recently, and so on and so forth. And generally, they've been quite suppressed, the funding rates. And one way of doing that would be to do that with the fixed rate future, building some calendar spreads there, but that market is not very liquid in crypto. And it's a kind of a funny thing to say, but even before we exited the beta, on our small beta, you could trade similar clips as on Binance for that sort of calendar spread with similar slippage. So I have a lot of fun saying I'm as liquid as Binance while I'm in my beta. And obviously that doesn't say a lot about my liquidity. It says more about Binance's liquidity on that particular instrument, right? It's still a funny thing to say. So some people did it, but it's a very reasonably sophisticated trade. It's expensive. It's like 2 to 4 legs of that trade. So very few people would be interested in managing it that way. And the capacity is very limited. So now you can do that. And the hypothetical trade for somebody, again, if you take a basis trader, and that could be somebody who is like a hedge fund doing a basis trade, or some of those, for example, tokenized basis plays as Ethena and the likes. So essentially, back in the day, to trade basis, you would, for example, you want to do basis on Bitcoin. So you go long Bitcoin, then you short perp on Bitcoin. So you hedged against the underlying Bitcoin price volatility, and you collect funding. Funding is normally positive, as we discussed before, typically 10.95%. So you're actually getting paid 10.95 without doing much. And then basically when it dips under a certain level, you exit the trade and then get back in if that makes you comfortable, and so on and so forth, right? And that's that lasted for a while. Now that the returns on that are suppressed, so you could potentially now, for example, that getting in and out of the position could completely kill your returns, because we're talking about short-term trades normally. We're talking like a month or something. Now you could add a third leg. You could go on Rho, and you could also short that. Typically, the rule of thumb is if you want to hedge your rate, you go the same on the perp. You go the same direction as you traded the perp. So for a basis trade, if we shorted the perp, you go on Rho, you short future on Rho. So you end up, instead of receiving the floating rate, you start receiving the fixed rate that Rho is paying you in exchange for the floating rate that you're getting from Binance. That will be the calculation of your P&L on Rho. So essentially, you fix your basis for a chosen horizon. So again, for example, today you could do it for June, for July, or possibly longer. And you don't have to bother anymore because you're hedged against that fluctuation. The only time you need to trade is when you're closing the position. You close your hedge as well. Occasionally, you might need to adjust the size of that hedge if something drastically changed with the price of Bitcoin, for example, but that's sort of normal. That's it. As simple as that. So that's a primitive that didn't exist before and becomes way more meaningful in the current sort of suppressed return environment, which looks like it's probably going to be structural because it followed the explosion of, again, the democratization of basis trade that Ethena and other similar people brought about.
Makes sense. Yeah, it's definitely like a more sophisticated trade, and now it can kind of simplify it, it sounds like.
Hopefully so.
Yeah. I guess maybe how could Rho impact, we kind of talked a little bit about some aspects here, market behavior, but how could Rho impact the behavior of the market makers who rely on leverage or are sensitive to funding costs, right?
That's an interesting one. So the second time I want to speak about a large market player who recently got acquired, Hidden Road, right? Got acquired for XRP, but back we spoke to them, we spoke to other prime brokers in the space. So there are a lot of leverage the prime broker would provide for two basis traders. And for them, obviously, if you're looking at the biggest risk is actually the volatility of the funding rate. So again, that's the only risk which is present in that trade, realistically. The only market risk that's present in that trade. So once that is taken away, they can suddenly reduce the collateral requirements for the trade. So we're increasing capital efficiency quite substantially. And that's the piece of work that we're doing with the primes in the space. Hidden Row has been one of we've been talking to, but there are others as well. That's the kind of the piece of work we're doing together, trying to figure out how would that work and what would that mean for their clients. But obviously, balance sheet is scarce in crypto, and additional capital efficiency is always a massive capital advantage. It's probably one of the biggest competitive advantages you can have as an infrastructure provider in the space. So that's one potential aspect to it. Probably the most meaningful, actually. So just always when we talk to a lender, be that a straight up lender, a prime broker, or maybe even some of the venues that provide leverage, they always speak about it as what's good for the risk profile of my clients is good for me because my business grows.
Yeah, definitely.
What's the most exciting thing for you right now in crypto, Alex? I mean, obviously we're talking about interest rates. If there's anything specific on that front, but I'll kind of leave it open for you.
That CME for crypto rates would be nice. Sorry, I had to. The most exciting thing in crypto, I'm kind of boring that way because I always get very surprised when I see some significant things happening. For example, like a firm raised $100 million from a prominent VC, and it's not a Web3 firm. I always get confused that there is life outside of crypto, which is not great, but that's what it is. And I also live in the DeFi and more of an institutional DeFi corner of the space. So the most exciting things for me are normally quite boring. So things like, obviously, like if you were looking at the plain impact for the market, then the Bitcoin reserve announcement would be major.
Mhm.
You can argue that some of it is already priced in, but I think probably not all of it, if you ask me. Then if we're looking at some of the other developments which potentially offer some tectonic shifts, like obviously the change of the stance in crypto in the US has been massively exciting, which was reflected in the market action. As of today, I think stablecoin legislation, Bitcoin reserve, all those things we're eagerly waiting for are going to be super impactful. And that annoying place that we as an industry has been for a very long time with kind of gray zone when we're not forbidden from doing our business, but not explicitly permitted either, and kind of always have to second guess what will be permitted when the regulation kicks in. Would be awesome if that goes away. It just simplifies my life drastically. I'm happy to do whatever. Just tell me what do I need to do. And in terms of the products, I've most of my active crypto career, I've been working around Ethereum's ecosystem, so EVM ecosystem more broadly. I think Spectra was quite interesting, and I'm very excited to see that Ethereum is actually seemingly changing its view from working on things which are only relevant to hardcore techies into like even the way they frame it in the announcements. They're talking that headline read basically Ethereum, the previous upgrades made Ethereum better. Now it makes it better to use or something like that. It's like a loose quote. So like suddenly we care about the UX. And I think Ethereum is obviously something that made DeFi and made crypto use cases into anything but payments. I'm a big believer in the project still. I'm happy that there are some competitive ecosystems that make Ethereum, do not let Ethereum rest and not evolve. I think it's quite clear that things need to happen. I'm expecting a lot out of ETH ecosystem over the next couple of years, but generally speaking, that I think that heightened competition between layer ones and between different technologies like EVM versus SVM versus MOV, I think it's super cool, and that's what the industry needs. Because eventually, again, is what clients care about is the quality of the product. It should be easy to use, fast, convenient, cheap. That they don't care what's the underlying technology, and that kind of market forces ecosystems to think in these terms. That's great for everyone.
Yeah.
Yeah.
Competition. I like it.
That's always good.
Always.
That's great. Regarding, I'm talking about DeFi a little bit. And most DeFi innovation has focused on token incentives or AMMs. You're going after a core capital market infrastructure, which is amazing, right? The interest rate market. Do you see this as the real DeFi going forward? That is putting forth, given the past and what it is today.
Maybe not that categorically, but I think it's what we should strive for as the core use case. Because there, like DeFi, the way to rally early support is to tell everybody you're against everybody else. But once you reach a certain scale, you cannot beat them. You have to join them, right? So the advantages of some of the primitives that we are using for our market are so clear compared to some of the things that, granted, have been working very successfully for a very long time, like trusted and tested and proven, but probably reached their limits. And so obviously tokenization of real world assets is a no-brainer, not for everything, not as an alternative, but more like a supplement to the existing rails. And we want to be at the forefront of that when the market actually takes that call. And I know from my experience at Copper, for example, in 2021, 22, before FTX, corporates were all in, institutions were all in, and that happened like this. And they were properly in for a while until they weren't, as much as they can, right? They're still moving reasonably slow compared to us, but that's the nature of their risk profile. That's what they're supposed to do. I hope now we're kind of seeing the same pattern now, and I hope now that's going to be a little bit longer and a little bit more efficient, and we'll see some real use cases, and we see like new headlines every day, and that's super exciting. And obviously, want to be a part of it, not to sit in our small corner and tell everybody we're better from afar, right? We want to help that and be one of the champions of that happening.
Yeah, definitely. I guess this is maybe a quick follow-up question to that kind of thought process. I mean, all three of us here on this call have had a TradFi background as well. How has the TradFi mindset helped you and also hurt you in the same token getting into this space? Because I grapple with it every day in certain cases, right?
So yeah, it's like, look, my TradFi mindset is helpful in the long run, hopefully. Yeah. But in the short run, you know that as well as I do, right? You miss a lot of opportunities just because it doesn't sit well with you. Be that some of the investment opportunities which you do not understand how people can get interested in that. It just like it's my shortcoming. I get it. People make a lot of money doing that. I don't know how to do it. I don't understand it. I kind of parted with a fundamental investment thesis a long time ago, but not enough to ape into some random coin for 2.5 hours before it kind of dumps again. I don't understand that. I cannot do that. And even in terms of a lot of things that we all know people are doing in the market would not be okay in TradFi. And that goes so against my grain that I cannot do that. My company cannot do that. And we're probably missing a lot of opportunities by not jumping on the bandwagon. And maybe the consequences for that are not as severe as they would be in TradFi. But maybe not. When the regulation properly kicks in, that's when we find out, right? So we're playing a bit of a long game. We know a lot of people in the space who are following the same thesis, and they're credible, they're reputable, and once it's the normal when the tide rises, it lifts all the boats, and we'd rather be one of those lifted, right? So that's why we should think a little bit more long term.
Yeah. So it'll be a while before we see meme coin rates.
Listen, we're very customer driven. If you're telling me you want to trade that in size, I'm gonna make it happen.
There's a market, right?
As always, yeah. I'm everybody's boy when somebody comes with real volumes and solid requests.
Well, this has been great. I appreciate your time, Alex. It's been good to get into the weeds of kind of what you're doing. I'm excited to hear what you're building.
Alex, this has been a lot of fun, man. Really appreciate you joining us. Glad we were able to finally get this call on the book. So appreciate your flexibility there as well. Where could people go to connect with you and learn more about Rho Protocol?
Sure. So we are Rho.trading. Rho is RHO, like the Greek letter Rho. So Rho.trading, our website, app.Rho.trading to go straight to see what the product looks like. We are Rho_XYZ on Twitter. You can also find us if you scroll to the bottom of our landing of our website. You'll see the links to our Instagram. Oh, sorry, Instagram. We don't have Instagram just yet. You'll see the links to our Discord, LinkedIn, Twitter, all of those things, Telegram, and I myself am Alex Ryvkin. You can find me quite easily. Just Google it. I'm on all the possible mediums that you might want to connect with me on. For any specific requests, I'm always available.
Awesome. This has been great, Alex. We appreciate the time again. This has been a fun conversation. We'll make sure you include all that in the show notes as well.